Okay, thank you for that, members. No, we just want to make sure that the cameras were out of the room. So I call this meeting to order. Welcome to meeting number 112, the House of Commons Standing Committee on Finance. And pursuant to Standing Order 108 Bracket 2 and the motions adopted by the committee on Thursday, September 21st, 2023, as well as Monday, November 21st, 2022, the committee is meeting to discuss the report of the Bank of Canada on monetary policy and resuming its study of policy decisions and market forces that have led to increases in the cost of buying or renting a home in Canada. Today's meeting is taking place in a hybrid format pursuant to standing orders. Members are attending in person in the room and remotely using the Zoom application. I'd like to make a few comments for the benefit of the witnesses and the members. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you're not speaking. Interpretation for those on Zoom, you have the choice at the bottom of your screen of either floor, English or French. For those in the room, you can use the earpiece and select the desired channel. Although this room is equipped with powerful audio systems, feedback events occur. These can be extremely harmful to interpreters and cause serious injuries. The most common cause of sound feedback is an earpiece worn too close to the microphone. We therefore ask all participants to exercise a high degree of caution when handling the earpieces, especially when your microphone or your neighbor's microphone is turned on. In order to prevent incidents and safeguard the hearing health of the interpreters, I invite participants to ensure that they speak into the microphone into which their headset is plugged in, and to avoid manipulating the earbuds by placing them on the table away from the microphone when they are not in use. Reminder that all comments should be addressed through the chair. For members in the room, if you wish to speak, please raise your hand. For members on Zoom, please use the raised hand function. The clerk and I will manage the speaking order as best we can, and we appreciate your patience and understanding in this regard. So with us today, we have from the Bank of Canada, the Governor. Welcome, Governor Tiff Macklem. And joining the Governor is Senior Deputy Governor Carolyn Rogers. So at this you have an opportunity to address us with some opening remarks before we get to the members' questions. We'll go for about an hour and 20 minutes, and then we will have a health break as we transition then into that last hour. Governor?
Perfect. Well, thank you, and good afternoon. I'm very pleased to be here with Senior Deputy Governor Carolyn Rogers to discuss our recent monetary policy report and our decision last week. Last week, we maintained our policy interest rate at 5%. We held our policy rate steady because monetary policy is working to cool the economy, relieve price pressures, and we want to give it time to do its job. But further easing in inflation is likely to be slow, and inflationary risks have increased. So before I take your questions, let me give you some of the economic and financial context for that decision. Depuis notre dernière comparaison.
Since the last time we were here with you, the Canadian economy has slowed, and the data suggests demand and supply are now approaching balance. We're now seeing clearer evidence that higher interest rates are moderating spending and relieving price pressures. The economy has entered a period of weaker growth, with growth averaging about 1% over the last year. Growth in gross domestic product is forecast to remain below 1% for the next several quarters before picking up in late 2024 and rising to 2.5% in 2025. With the economy expected to move into excess supply this year, and with growth anticipated to be weak for the next few quarters, we think there's more inflation relief in the pipeline, and we expect inflation in Canada to ease gradually and return to our 2% target in 2025. But we're worried that higher energy prices and persistence in underlying inflation are slowing progress. The effects of higher interest rates on inflation are most evident in the prices of durable goods, such as furniture and appliances that people often buy on credit. These effects have also spread to many semi-durable goods, a category that includes things like clothing and footwear, as well as many services excluding shelter. Inflation in these categories is now running generally at or below 2%. Price increases for grocery, while still elevated at almost 6%, have also eased and are expected to moderate further. However, a number of factors are getting in the way of low inflation. Higher global energy prices are increasing prices at the pump, and that is pushing headline inflation back up. Structural supply shortages in our housing market are boosting prices for shelter. In addition, near-term inflation expectations and wage growth remain elevated, and corporate pricing behavior is normalizing only slowly.
We're going to be discussing housing in more depth today. Let me provide some additional detail now. The rise in interest rates has cooled demand for housing. Since February 2022, housing resales have declined by 33%, and house prices are down about 10%. But shelter price inflation has picked up and is running above 6%. Structural pressures in the housing market are slowing the return of inflation to target. Shelter price inflation has become more broad-based, with rent and other accommodation expenses increasing, in addition to the ongoing rise in mortgage interest costs, which is related to our own policy rate increases. We look forward to discussing these housing dynamics with you in more depth. The combined effect of all these pressures on inflation is that we now expect inflation to be about 3.5% through to the middle of next year. As excess supply in the economy increases, inflation should ease in 2024 and reach 2% in 2025. Overall, inflationary risks have increased since July. The forecast we released last week has inflation on a higher path than we expected last summer. In addition, rising global tensions, particularly the war in Israel and Gaza, have increased the risk that energy prices could move higher and supply chains could be disrupted again, pushing inflation up around the world. With clearer evidence that monetary policy is working, my colleagues and I on the bank's governing council judged last week that we could be patient and hold the policy rate at 5%. However, to be confident that our policy rate is high enough to get inflation back to 2%, we need to see more easing in our measures of core inflation. We will continue to assess whether monetary policy is sufficiently restrictive to restore price stability, and we will monitor risks closely. Our decision last week reflected our best efforts to balance the risks of over and under tightening. We don't want to cool the economy more than necessary, but we don't want Canadians to have to continue to live with elevated inflation either, and we cannot let high inflation become entrenched in the economy. If inflationary pressures persist, we are prepared to raise our policy rate further to restore price stability. In summary, we've made a lot of progress in reducing inflation, but we're not there yet, and we need to stay the course. When price stability is restored, the economy will work better for everyone. And with that, Senior Deputy Governor and I will be very pleased to take your questions. Thank you.
Well, thank you, Governor and Senior Deputy Governor. We are going to get right into questions. Our first round, each party will have up to 6 minutes to be asking you questions. We are starting with MP Howland, please, for 6 minutes.
Thanks, Chair. Chair, can my time be paused? I wanted to put a motion on notice. Can my time be paused?
All right, we pause the time.
Okay.
Yeah.
The Finance Minister, colleagues, the Finance Minister has appeared exactly 0 times to this committee on a motion that I passed last November to appear at this committee quarterly until inflation comes down to target rate. So given that, I want to put this notice of motion that the committee report to the House its censure of the Deputy Prime Minister and Minister of Finance for ignoring the committee's requests for her to appear on the cost of living crisis. Thank you, Chair.
Okay, thank you, MP Allen.
And before I get started with my questions, Governor, I'd like to make a request to you to please table to the committee the number of mortgages that will be rolling over from October of this year until the end of 2025, broken down by month. Can I get a confirmation on that, please?
I don't have that number in front of me.
Can you table it to the committee?
We have, so we do know the number of mortgages at federally regulated financial institutions, and we could provide that information to the committee. That would be
broken down by month,
the
please,
majority.
the ones that are rolling over.
We'll do our best to get the information you're asking for.
Governor, you said last week at your presser, quote, government spending will be adding to demand more than to supply in growing and in an environment where we are trying to moderate spending and get inflation down, that's not helpful, end quote. Would it be easier if government didn't add any new spending in the fall economic statement or next year's budget? Would that be helpful?
Well, let me make some general comments here on fiscal policy. So, any standard economic textbook will tell you if you cut government spending, that will tend to slow growth, raise the unemployment rate, and reduce inflation. And similarly, if you increased taxes, it would do the same thing.
So in the context of your own words about government spending, these were your words, would it be helpful, let me ask you, why is it not helpful to you?
It would be helpful if monetary and fiscal policy was rowing in the same direction.
Are they rowing in opposite directions right now?
Right. So if you look at what we've seen over the last year, there's different ways to measure it, but one way to do this would be...
Are they rowing in opposite directions? Just a yes or no.
Over the last year, no. Over the next year, there certainly, if the spending plans of all levels of government were to be realized, government spending, by our estimates, will be growing faster than supply.
So
And
rowing in
that
opposite
sense,
directions.
that would not be helpful in getting inflation down to target.
Rowing in opposite directions, yes or no?
Yes.
Okay. So David Dodge, your predecessor, has recently said the federal government is running a very expansionist policy, an increase in the budget balance that adds to inflationary pressures. It forces the bank to run a tighter policy. The PBO recently has also projected that the deficit will be $6 billion higher than the government told Canadians in their budget. Given that even in last fiscal year, the government grew their spending by 11.5%, are you concerned about the trend in the growth of government spending? Is that not helpful either?
Well, what I indicated and what we have in our monetary policy report is the spending plans of government. And what I just indicated is that if you take all those plans, you add them up, by our estimates, they're growing at 2.5%. Potential output growth, supply side of the economy is growing at 2%. So
is it? I just want to confirm
that
is
is
the $6 billion.
Mr. Chair, point of
The-
order. Mr. Chair, point of order.
Point of order.
Can we please allow our guest to respond fully to the question? He's trying to answer the question is being interrupted.
Chair, I have a limited amount of time.
Yeah, MP Holland.
Because we've already heard some
But
of the
we don't want
testimony.
crosstalk, MP Holland, so we don't want you talking over the witness. Allow the witness to finish his answer to your question, please.
Okay, Governor, the $6 billion increase in deficit that was that the PBO told us about, is that included in your bank projections?
So what is in, I don't have the PBO report in front of me, but what is included in our projections is we take the federal budget, we take the budgets of all the provinces, we put that together, we make a best estimate of the
Exactly.
fiscal
So
plans.
we know
So
that
those
it's already
are
$6
built
billion
into our
over.
projections.
The budget
Point
is
of order,
$6 billion
Mr. Chair.
over.
Point of order,
Yeah.
Mr. Chair.
MP Zarowitz.
I'm very sorry.
Yeah.
The governor was not able to answer the last question or this question. Nobody who's listening would actually be able to understand the response.
No, MP Holland, please, no crosstalk. Let's just allow the governor to finish his answer to
Trying to get
your
him to the
questions.
point.
No, but he's trying to finish his answer to your questions. Yeah, MP Holland.
We know that $6 billion is what they're already over. Is that helpful for you in your projections in bringing down interest rates?
Look,
Yes or no?
I am not going to get into the details of fiscal policy, okay?
Governor, just with due respect, you did comment on fiscal policy
Because you asked me
you did
to.
comment on government spending.
I'm not going
last
to comment on specific fiscal plans, specific spending plans. What I have said, and I've been very clear, is that if you take all the spending plans of government for the next year, they imply growth in spending of 2.5%.
Fair enough. Yeah, we've heard that
is-
for the third time. So
MP Holland,
what I'm
please allow the governor to finish his
Definitely.
answers, please,
So-
to your
Point of order.
questions.
Mr. Chair, point of order.
Point of order.
My understanding is that at these committees, because we have such limited time, that the witnesses are encouraged to use a similar length of time in responding to the question as it took to pose the question. Mr. Halan is asking yes or no questions. I think it's fair.
That is not
if
correct,
my
MP Shear.
colleague
That is
trying
not
to
that is not
focus
correct.
in
What you're saying
on
is
getting
not
actual-
correct, and the governor should have an opportunity to answer the question. So,
I'm not going to have yes or no answers when you get down to specific questions of fiscal policy.
Okay, so, but with due respect, you said you did your projections based on current government projections.
Correct.
We know it's already $6 billion over according to the PBO. Is that helpful in you bringing down the interest rate? Yes or no?
I think I've answered that question. I can't really add any more than what I've already said.
Thank you, and that's your time, MP Howland. And now to MP Zerowitz,
Point
please, for 6 minutes.
Point of order, Mr. Chair. I was timing the whole thing.
Point of order?
And I had full another minute left.
So-
I've
so-
got it too.
No, we've got
Yeah,
it here.
yeah,
6:08.
you weren't
No,
stopping
No,
for
that
the
was the
points of
time.
order.
That was the time.
Mr. Chair, there's another minute. Let's
That was
replay
the
the
time.
tape.
The chair has said that was the time.
Okay, I challenge the chair.
MP Zerowitz.
I challenge the chair.
Okay, there's a challenge of the chair. Clerk?
The question is, shall the decision of the chair be sustained? Mr. Baker.
Sustain the chair's ruling.
Ms. Bandayan.
Oui.
Mr. Wheeler.
Sustained.
Ms. Derowitz.
Sustain the chair.
Ms. Thompson.
Sustain.
Mr. Chambers.
No.
Mr. Halan.
No.
Mr. Lawrence.
No.
Mr. Morantz.
No.
Monsieur Sainte-Marie.
Oui.
Pour la présidence. Oh, whoops. For the president, the chair.
7 yeas pour, nays contre, 4. 4.
Thank you. It's sustained. So to MP Zerowitz for 6 minutes, please.
Thank you so much, Mr. Chair. And I want to thank the governor and the deputy governor for being with us today. Thanks to both of you for your extraordinary work, particularly during these very unprecedented and very difficult times. I want to start off just maybe getting you to clarify very quickly, Governor. You had indicated in the question to my colleague across the way, you said something along the lines that all levels of government spending plans could result in fiscal policy being out of touch with monetary policy. Did I hear you correctly? And can you clarify that you're speaking about more than just the federal government spending? If you could just clarify that for us, that would be great.
I am talking about all levels of government, both federal and provincial. I don't think I used the word out of touch.
Okay, thank you for that. We had a peak of inflation a little while back at 8.1%, and today the inflation rate is 3.8%. And, you know, no one would say that our inflation rate isn't too high. It is. But can you just tell us what you can attribute this improvement in the situation around inflation, please?
I think there are two sets of factors. Part of it is global. One of the reasons why inflation went so high was that globally demand for goods ran way ahead of the ability of the economies to supply that. And so you saw a big run up in global goods prices. And then, of course, Russia's attack of Ukraine drove energy prices, agricultural prices a lot higher. The global supply chain issues that were clogging up the system have largely been resolved. Of course, Russia's invasion continues, and we now have a new conflict in the Middle East that is creating uncertainty. But energy prices have come down from their peaks at the start of the war. Agricultural prices have come down. And so those things have relieved inflationary pressures coming from globally. The other part, though, is more domestic, and that's really where monetary policy works and matters. When the economy reopened, what happened was demand recovered much more quickly than supply could recover, and that resulted in demand running ahead of supply. The economy was very overheated, and that created domestic inflationary pressures. We responded forcefully. We raised interest rates actually faster than we've ever raised them, that, what we see now is those higher interest rates are working through the economy. Growth in the economy has cooled. The economy was very overheated. It is now, by most indicators suggest it is now close to balance. That is relieving those inflationary pressures. And so you have seen inflation for both those global and domestic reasons has come down considerably. We think that we think growth is going to be weak for the next few quarters. And what that means is we think there's more inflation relief in the pipeline, and that's something we're certainly looking for.
Well, I think all Canadians would agree that we're all looking for that as well. And just very quickly, just because I have a couple more questions for you, Governor, how would you compare Canada's current economic situation compared to that of our peer countries in the G7?
Well, there's many sort of dimensions to compare. In all our countries, we all went through COVID at virtually the same time. Every country plunged into recession. Every country's come out of that. We all experience much higher inflation, and inflation's coming down in all our countries. If you look at Canada's comparative recovery, Canadian economy has recovered quite well. It hasn't recovered quite as strongly as the U.S. economy by some measures, certainly by GDP. On the employment front, actually, we've had a very strong recovery. Our recovery's been stronger than some of our European neighbors. Inflation in Canada didn't go as high as it did in Europe, not even quite as high as it did in the United States. Inflation has come down in all our countries, and it's now not that different across most advanced countries.
Okay, thank you for that. There's a belief, at least when I talk to my constituents in my riding of Davenport, that if we are increasing interest rates, so if you increase rates, that actually leads to more inflation. Would you be able to, how would you respond to Davenport residents who might be saying that?
Well, your Davenport residents are right that when we raise interest rates, that increases the cost of borrowing. And for many households, if you have a mortgage, particularly if it's been a variable rate or it's reset recently, those households have seen a substantial increase in the cost of carrying their mortgage. So there is that direct effect, and that's something that we take into account, and we build that into our analysis. But what higher borrowing costs does is it slows spending on a wide range of goods and services. It slows the housing market. It slows spending on durable goods. We've seen that start to spread to services, and you can see very clearly, and in fact, we document this in the Monetary Policy Report, the areas where higher interest rates are biting the most are precisely the areas where inflation is coming down the most. So if you look at many durable goods, things like furniture, household appliances, those prices have actually been declining. Many semi-durables, things like clothing, footwear, inflation has come down considerably, and many services, excluding shelter, which is a separate topic, have come down. Those categories all have inflation now at or below 2%. So you can see that higher interest rates are working to relieve price pressures. We have some way to go, as you suggested.
Thank you.
But yes, if interest rates had not increased,
Thank you, Governor. Yep.
inflation would be
And thank
higher.
you, MP Zerowitz. Yep, and now
Thank you so much.
Yeah, MP Sainte-Marie,
I was
please.
just going to raise my point of order, Mr. Chair.
Point of order?
Yeah.
MP Scheer.
In my previous point of order, I reminded the chair that there had been a rule adopted that the length of time for answers should be commensurate with the length of time it took to take the question. You said that I was wrong. I just want to draw to your attention a motion that was adopted on Thursday, December 16th, that includes paragraph E, that during questioning of witnesses at all future hearings, the chair of the committee apply the following rule, that the time to respond to each question not exceed the time to ask it, unless with the permission of the member who has the floor. That motion was adopted. So I just wanted to remind that for future rounds.
Thank you for that, MP Scheer. And MP Scheer, I know you're not regular to this committee, and I don't know how many times you've been at this committee, but members are fully aware that we've allowed for questions and answers in a very respectful way. And I've also allowed members to go beyond their allocated time that we have for questions, depending on when the question is asked and when it is answered. So if someone's asking a question, you get to it, you're at about 5 minutes and 50 seconds within that 6-minute segment, I'll allow the answer to be had, and that may be it may be go to 6:30, as the last one did. That's how we've conducted our work here with the support of the members. I believe the members have. This is how we've done all of our meetings here, MPs here, and I would think, but I'm at the will of the members to continue to conduct our meetings the way that we have, be it the Conservatives or Bloc or NDP or Liberals. I think everybody has enjoyed or liked the way that we have been conducting those meetings. Yeah. Now we're on to MP Sainte-Marie, please.
Oui, merci, Monsieur.
Thank you, Mr. Chair. First of all, I'd like to welcome Mr. Macklem and Mr. Grodges. Thank you very much for being here. We appreciate you appearing here to answer our questions so frequently, and also thank you very much for having made a part of your presentation in French. That's very much appreciated. I'd like to come back to the questions that were addressed by my colleagues before concerning your statement of October 25th, where you might have given us to believe that federal spending is fueling inflation. Is that related to the answers you gave? So is federal spending fueling inflation? Answer. Currently, what we're seeing is that the growth rate in federal spending is below 2%. And the potential growth rate of supply in the economy is also at around 2%. So if federal spending increases, well, that will not contribute greatly to inflation. But what I did say is that when we look at next year, in 2024, and we look at the provincial and federal government's spending plans, we estimate that the fiscal growth will be of some 2%, or 2.5% rather, and that is above our forecasts for the economy. So if all those plans are realized, then yes, there's a risk that fiscal spending will increase more than supply, and that won't help to reduce inflation. Thank you. That's very clear. I'd like to thank you for that. Now, the fact that in such a scenario where we're talking about 2.5% instead of 2%, is that a significant impact on all of the economy? Answer. Yes, you're right. It's 0.5 percentage point. So it's not significant, but it still remains a risk, especially if the government incurs more spending, then that figure might be higher. And certainly that is something that could create problems in reducing inflation. Thank you. On another point, I'm going to cite an article from the Journal de Montréal 3 days ago, which reports on an interview that you did with CBC, and the title, I'm going to talk about it and then ask my questions. The title is that the Bank of Canada is finished with the raising of the rate. And it says that the Bank of Canada believes that it won't have to raise the policy rate to be maintained long enough. So that means that the Bank of Canada might reduce it when we see clear signs that we have returned to a 2% inflation rate, and then we might think about reducing the policy rate, but not before that. So this is in this article, but I think that what you're saying is that you would not have to raise the rate. Is that article accurate? Is that what you believe? And can you comment on that? Thank you. Answer. I'm just going to add one thing. to your summary. Yes, one of the scenarios is that we will have raised the interest rates high enough that we will soon see an increase in the inflation trend, and then we will be confident in our decision. But as we said in our monetary report, there are inflationary risks, and the other scenario would be that higher inflation becomes entrenched and we don't see any reduction in the core inflation. And if that happens, then we're prepared to hike our policy rates again to tame inflation, to bring it back to 2%. So our conclusion last week is that we're seeing signs that this is working. We've been patient, but if these risks materialize, then we are prepared to hike the interest rates. Thank you. Thank you for your answer. My last question, a very brief one. 5 days ago, the Le Devoir published an article that said the Bank of Canada is asking, or rather the provincial premiers asked you not to hike interest rates, but you said we cannot have the independence of the Bank of Canada threatened. Can you please comment on the importance of your independence? Thank you. Answer. As you said, yes, I received a number of letters from some provincial premiers, and the letters that I received regarding the decision that was made 6 or 7 weeks ago, I indicated that we are very pleased to hear from the premiers about the effects of higher interest rates in their provinces and how these developments have been affecting their residents. But I also answered that it is not useful when they give us instructions, when they give instructions to the Bank of Canada as to what we should do with interest rates. And that's because it can create an impression that monetary policy is not independent of governments. And I think that everyone agrees with that is not useful. The independence of the central bank is key to maintain price stability. Thank you.
Nikki, please.
Thank you very much, and thank you, Governor, for attending here today. I'm wondering maybe we could just start by, I'll start by asking, how elastic or inelastic you think demand for housing is for any particular Canadian. So regardless of what happens to price, even if it goes through the roof, it's fair to say Canadians still need and want a roof over their head, regardless of price. Is that a fair assessment?
Well, people obviously need shelter, but if they can't afford it, they can't buy it.
Indeed, but the need doesn't go away. And would you say that in this present moment, we're experiencing a serious supply shortage in the Canadian housing market?
We've seen a building supply shortage now for at least a decade.
Mm-hmm.
And the supply of housing is not keeping up with the growth in demand, and that is creating a more acute problem.
And would you say that since interest rates have gone up, that housing starts are lower and we're seeing less new housing stock being added in a higher interest rate environment?
Higher interest rates have dampened demand for housing, and in fact, housing market was very overheated. Housing prices were rising extremely rapidly when we had very low interest rates. As we've raised them, housing prices have actually come down. However, higher interest rates means the carrying cost of mortgage is higher, so affordability has not improved.
So we've heard around this table from experts in the financial industry and the housing industry that the housing crisis won't be solved without some significant level of government investment and contribution. Are you inclined to agree with that assessment?
I will say that we've we've had a building supply issue in housing now for a decade. And I think speaking on behalf of certainly Senior Deputy Governor and I, we are pleased to see the governments on all levels are more focused on this issue. I don't think this is something that any one level of government is going to be able to solve by themselves. It is going to take all levels of government putting their heads together, and ultimately it's the private sector that are going to build most of these houses or apartment buildings, and they certainly need to be at the table as well.
So I guess my question for you is when you talk about, the forecast of 2.5% spending increase across government, I mean, from the point of view of understanding inflation, from the point of view of understanding how we can get our housing market to the place where prices are coming down for Canadians that are having access to more affordable housing, does it not make sense to discriminate between kind of spending in general and spending on building new units, whether those are affordable units, social housing units, or whether it's financing that facilitates market housing? Is that not a categorically different kind of spend than general increases in spending with respect to the current inflationary environment that we're living right now?
Well, you're certainly right that when you're looking at government spending and you want to map that from government spending to the implications for inflation, the amount matters, but also what the spending is matters. Different types of spending have different multipliers. Some spending is much more related to demand. Other spending is adding to supply. So the more that the spending is adding to supply and not demand, that will actually help moderate inflation. Yes, I think to the extent that government spending is augmenting the supply, that will have less, that'll be better for inflation than if it's purely increasing demand. So there's a lot of things you can do on housing, and some of them may be more stimulating demand, others may be more stimulating supply.
So where there's more of a direct line between government expenditure and the creation of a unit, as opposed to government putting money out in the economy that could be used to bid up the price of existing housing stock, you would tend to look at that as less likely to cause inflation and maybe even have a salutary effect and help bring inflation down if there were more supply in the housing market. Is that a fair interpretation? Okay. Well, I think it's important because, some of your comments are taken to reflect on fiscal policy despite your best efforts. And I think it's important for Canadians to understand that there are types of government investment that can actually contribute to reducing inflation while solving some important problems, and that not all government spending is equal in that regard. And, that matters a lot for conversations here on Parliament Hill about how much government should be investing in housing, particularly, I would argue, and this is my views, I'm not expecting you to have an opinion on this as a matter of fiscal policy, but on social and affordable housing, where government investment tends to be more directly tied to the creation of new units than some of the kind of financing facilities that government sometimes puts out for private developers and other things that do ultimately issue in certain kinds of housing, but are often at the higher end of the housing spectrum, which don't really help on the affordability measure. And is it not the case that the cost of housing is one of the biggest current drivers of the inflationary arc? Is that?
It is an important driver of inflation, and as I indicated, the sort of ongoing price increases are one of the things that are making it difficult to get inflation down.
Thank you, and thank you, MP Blakey, and members, witnesses, moving our second round. I've got MP Chambers for 5 minutes, please.
Thank you, Mr. Chair. Welcome back, Governor, Senior Deputy Governor. Thank you for being here. Just curious, there's a lag to monetary policy, I think what you've talked about before. Is there a lag to fiscal policy?
There are lags to fiscal policy. Again, it depends a lot what it is. So if you give a fiscal transfer directly to households, the lag probably won't be very long. If you embark on, say, an infrastructure spending program, the lag's probably going to be a lot longer. So, the difference between monetary and fiscal policy is monetary policy, we really have one target, one instrument. We raise and lower interest rates. we have reasonably good estimates of the lags. Yes, there's always uncertainty about those lags. Fiscal policy, though, there are many different instruments.
Thank you. So in the bank's analysis, have you looked at or considered, I know this year you said spending was below the 2% or at 2%, but the year prior, spending is up 25% versus pre-COVID levels on a run rate. I'm just curious if the banks considered that in their analysis of whether fiscal policy is expansionary or not.
Yes, we've been through a massive economic cycle, huge collapse in the economy, very rapid rebound. There were very forceful fiscal actions taken in the depths of the pandemic. Those certainly were key to a very rapid recovery, along with very stimulative monetary policy. So that is something we've looked at. We've also looked at, as we've discussed previously this committee, we were surprised with just how much and how fast inflation went up, and we've looked at those forecast errors to try to understand them and avoid making those mistakes again.
Thank you. Do you mind sharing with the committee the analysis that you've done about showing the spending by all levels of government? Could you table that with the committee and the bank's analysis? Is that something you would provide to the committee?
It's really all in the public domain. We publish our forecast every quarter. We come and we testify in this committee every quarter. As governments have been announcing their fiscal plans, we've been building those into our forecasts each time.
Okay. We'll change the subject for a minute. I think back to our first interaction at the committee. One of the objectives of QE, as I understand, was to help maintain a low interest rate, i.e., if the bank had not purchased government debt, it would put upward pressure on interest rates. Is that about right? Okay.
Yeah.
Okay.
Interest rates further at the term structure.
Thank you. This year, the federal government is borrowing $421 billion in the open market, and the bank is not purchasing that debt. Is it safe to say that that is a contributing factor to the rise in rates that we've seen? In fact, most recently, even when the bank has not increased its policy rate.
Well, government borrowing actually in public markets has gone down. During the COVID crisis, they had very large borrowing needs. As they've reduced their spending, their borrowing needs have come down substantially. And I guess I would add just on that, you have to compare Canada to other countries. Canada's deficit to GDP ratio is the lowest in the G7. Canada's borrowing needs are a lot lower than many other countries.
I have to break in here, and I quote from last week's presser: "The U.S. deficit means a lot more bonds being issued, meaning increase in supply has to be absorbed, and that pushes prices up a bit. The U.S. is doing $2 trillion this year, Canada doing $421 billion. That's a record, and no one is talking about that having a contributing factor. Interest rates. Mrs. Rogers, could you just mention whether you believe that it's a factor that interest rates are going up because of government borrowing?
Well, as we said in the press conference last week, there's a number of things. You're talking about just a sharp rise in the long-term yields on bonds. And as we said in the press conference last week, there's a number of things that are contributing to that. There's the term structure. We talked about, as you said, I think the quote you just gave was mine. I think the other thing I said is we're not seeing that same increase in Canada. We haven't had the same effect of
the 5-year. With respect, the 5-year moved up a bunch of basis points, and without the policy rate moving.
Yeah, and there's a number of things contributing to that. It's
including the government borrowing.
That's the time. Yeah, thank you, MP Chambers, and now to MP Thompson.
Thank you, Mr. Chair, and thank you both for coming. It's a real, it's a wonderful opportunity to be able to break through so many of the narratives that we hear and have your perspective. And certainly inflation and root of many of the things that government can do and is doing to help move forward. I want to just reference something that MP Blakey spoke about, which is the link to supply and inflation, and specifically around programs like the $10 day childcare that really helped move people into the workforce, women in particular, and also the work government is doing to address the climate crisis. Is that helping in level, move us to the levels of inflation that we want to see? Is it part of the supply portion of the supply and demand equation? Yeah.
Well, I think there's two very different things you raised there, so maybe I'll deal with them separately. So the daycare programs did help significantly increase the proportion of women and young women in the workforce at a time when we have a really, really tight labor market. So I would characterize that as something, to the governor's early description, that's something that added to supply, and it did help in a very tight labor market. It did help the supply of labor. The measures to address climate risk are probably a really good example of something with a very long lag, as the governor described earlier, where the effects of climate risk are more indirect. You can have an extreme climate event. So, for example, the forest fires that we experienced this summer, our estimate is they took about 0.5 point off of GDP for the second quarter. So, longer-term programs that mitigate those risks will, hopefully over time, as to the degree that they can reduce the number of extreme climate events, that would be helpful. But that's a very good example of something with a very long lag and something that might in the near term add to demand more than it would add to supply.
Thank you. And certainly either one of you, if you could speak to the resilience of the Canadian labour force and why you wouldn't qualify this period as a period of stagflation.
Well, stagflation is I grew up in the 1970s, and the big problem was stagflation. And what did that look like? It was double-digit inflation and double-digit unemployment. Inflation is still too high. 3-4% inflation is too high. I think, I know you're all hearing from your constituents. They're having trouble keeping up. Affordability is a real issue, and we need to get inflation down. Prices are going up too quickly. But it's not double-digit inflation. It's not even 8% inflation. We've brought it down considerably since then. And the unemployment rate actually remains pretty low by historical standards. It has gone up a bit, from about 5% to about 5.5%. But by historical standards, it's pretty low. So what we're seeing now is not what I would call stagflation. It is true that in our outlook that we put out last week, we did revise up our near-term outlook for inflation, and we did revise down our near-term outlook for growth. That is an indication that this is proving a little more difficult than we'd hoped. But I would stress that it is working, and as higher interest rates feed through the economy, we do expect inflation to come back down, growth can resume, and Canadians don't have to live with the ongoing anxiety of inflation.
Got about 40 seconds.
Okay, so then if I could just jump in with, the extenuating circumstances, the price of oil, the geopolitical realities, and certainly the tragedy we're seeing in the Middle East. This is impacting the would you say the inflation as well in terms of set the targets, but we have these other extenuating circumstances that are impacting the work within government in terms of budget and policy.
Yes, Canada's a very open economy. We work. We're a trading nation. We export. A lot of our income comes from selling things to other countries. We import a lot of goods as well. And when you operate in the world, global factors will impinge on your economy. And yes, when global oil prices go up, we see higher prices at the pump. Canadians are seeing that. We're also an oil exporter, so our energy companies are getting more revenue when oil prices go up. So you have to factor in all these effects.
Thank you, MP Thompson, Governor, and now to MP Sainte-Marie.
Merci, Monsieur.
Thank you, Mr. Chair. Mr. Governor, I would like to refer to analysis by an economist, Mohamed Eripian, done in the past few days on the global economy, especially the U.S. economy. And I'd like to have your comments on the Canadian economy. What he says is that right now there is a consensus among economists where the dominant vision is that we're heading for a soft landing, but there is also a risk that it could be a hard landing in the coming weeks. And the main risk would be due to the increase in borrowing recent, and this would depend on the central banks. It depends whether they maintain interest rates high for a long time to fight inflation. So what are your comments on that, on this analysis? Thank you. Answer. Since we began hiking interest rates, many economists have told us that we could be creating laying the groundwork for a recession. We are not in recession. Yes, we're in a period of low growth, and that is necessary to reduce inflationary pressures. With looking to the future, as you said, in long-term interest rates, especially in the United States, have increased significantly over past months. And as the Senior Deputy Governor just said, there are a number of factors that could explain this, but it is very difficult right now to be very specific as to which factors. In our outlook, in our forecasts that we published last week, we included an increase of the interest rates over the long term in our forecasts. But yes, there is a risk that those increases might be even higher. And if that happens, especially if it reflects it could reflect the growth rate in the global economy rate, and that will affect us in Canada because we're an open economy. So yes, it is a risk that we will have to monitor closely. Thank you. Thank you, Mr. Sainte-Marie.
Thank you. So as part of our pre-budget consultation, we've been hearing from a number of economists with different points of view, but one of the things we heard recently was that over the last couple of years, corporate profits as a share of GDP, so corporate profits are up in absolute terms, but they're also up as a share of GDP significantly. Is that consistent with the Bank of Canada's analysis?
I don't have any, at the tip of my fingers anyway, I don't have any analysis on profits as a percent of GDP, but what I would say is we have done some work on this, and in fact, one of our colleagues, Deputy Governor Nicholas Vincent, recently gave a speech on the topic, corporate profits. In an environment where demand is running ahead of supply, it becomes easier for businesses to raise prices. People get discouraged with inflation. They stop shopping around, and in that environment, if there's excess demand, people are less inclined to shop around. It's easier for business to raise prices, and that is exactly what business has been telling us they're doing in our Business Outlook survey. They've been telling us we are raising our prices more often and by more than we have in the past. That has come off a bit recently. What businesses are telling us now is as the economy gets back into balance, demand and supply are running closer. They have reduced the rate at which, both the rate and the amount at which they're increasing prices. We got a ways to go yet. They're still above where they were pre-pandemic, and so that is something we're going to be watching. If you read our press releases and many of the governor's comments, we always tell you the things we're looking at to know when core inflation is sort of back where we need it to be to get a headline inflation down, And corporate pricing behavior is one of the things we're watching closely.
Thank you very much.
Got about half a minute, a little more. Yep.
I mean, maybe what I'll say to that is that I think for your ordinary Canadian, I think one of the things that really makes you feel that the system is stacked against you is that you get gouged by corporations in a difficult economic time. They raise their prices, which causes the inflation rate to rise. And then the answer is to raise interest rates. And so the people that were getting squeezed by outsized corporate profits before end up squeezed on their mortgage and other products that they use financing to obtain. And so it's kind of a double whammy for the Canadian who's caught in the middle of these forces that are a lot larger than them, getting gouged by corporations on the one hand, and then having the monetary policy remedy be higher interest rates gets the Canadians again, and the corporations that have these large holdings actually can earn more on those holdings by doing less, just by sitting on the money or purchasing bonds or whatever else, because interest rates are higher. It does seem like a system that's designed to help the rich get richer and everybody else pay for it.
Thank you. Yeah, there's no time for an answer for that. But
I'll
maybe
just
it
say
might be in the next round. Go ahead.
Competition's a great thing.
Okay. Thank you, Governor. MP Blakey. MP Morantz, please.
Thank you, Mr. Chair. Governor, I had occasion to look at the Housing Affordability Index, and it was interesting that your bank publishes in 2015 at the tail end of Mr. Harper's administration, the index was at 32%. Today, under this Liberal administration, it's at 51%. So it certainly highlights the problem that we are in a housing crisis. Now, one of the things that you said last week that I thought was interesting, and it might have been Governor Rogers that was talking about it, is that there's normally and historically a correlation between interest rates and housing prices. So, for example, if interest rates go up, housing prices come down somewhat. If interest rates come down, housing prices go up somewhat. But you said something interesting that I wanted to get clarification on, and it had to do, you said that the reason housing prices are not declining as expected was because of the structural shortage of housing supply. I wonder if you could comment on specifically what you meant by that, briefly if you could, because my time is limited.
Actually, I think Senior Deputy Governor made those comments. So.
Yeah, I mean, very briefly, what we mean by a structural supply problem is that demand has and continues to run well ahead of supply of housing. And as the governor said earlier, that's been a problem that's been around for at least a decade. I think it was exacerbated through the COVID crisis when we were all spending more time in our houses and wanted more house or to relocate. So we saw a really extreme run up in prices.
So just to be clear, though, there are a number of factors that can go into a structural shortage of housing supply. One of those factors would be high interest rates, would they not?
That would be one. Zoning problems, labor shortages, supply costs. Yeah,
thank you for that. So one of the things, though, that I wanted to hone in on with you when it comes to this correlation is that you did say that you would expect housing prices to decline if interest rates went up, but that isn't happening because of the structural supply issue. But I'm curious as to your thoughts as to what will happen to housing prices as you start to lower rates, given the inelasticity of supply, the structural problem in getting housing built in this country. What do you think would happen?
Well, I think all things being equal, we might see a bit of an uptick in housing demand again. But as the governor said, we're really pleased to see the coordinated effort across multiple levels of government to try and address some of the supply issues. And again, it's more than interest rates that are going to need to change to solve the housing.
I just add, I mean, we know what happened when we did raise rates to emergency low levels during the pandemic. Housing prices went up 50% in 2 years. Part of that was just everybody was at home all day; they wanted a bigger house. But partly, interest rates were at emergency low levels. Cost of financing was low. So we don't predict every asset price, every price in the economy. But yes, I think what that points out is. We had a supply problem at low interest rates. We have a supply problem at high interest rates. Obviously, interest rates have a big impact on the housing sector. It's very interest sensitive. But we're not going to solve the housing shortage with interest rates.
Yeah. I'm asking these questions. It's not really an esoteric discussion. You probably saw the headline in the National Post today. This article says payment shock coming for most Canadians with mortgages, RBC says, by 2026, when $400 billion worth of mortgages are set to renew, increase in monthly payments could be as high as 48%. They went on to say that by 2025, credit losses will inevitably rise. So this is affecting real people in real time. And one of the things I want to ask you is, let's say that you determine that market factors were sufficient to start bringing rates down at some point. Would you wait until the monetary policy report, quarterly report, was coming out, or would you act earlier as soon as that information came to your attention?
Well, normally we unless there's a very immediate emergency, normally we act at our fixed action dates, which is 8 times per year. 4 of those times we have a monetary policy report, but we've demonstrated that, consistently that we can change interest rates at meetings without a monetary policy report. So yes.
Okay, that's great to know. Now, one last question in the 20 seconds I have left. Last week we had Robert Asselin here, and he said something very interesting. He said that economic growth is so weak at sub 1%, and that low growth in a high interest rate environment will make social programs unsustainable. Do you think he's got a good point there?
Well, lower growth and higher interest rates will certainly impact on the government's budget. I don't think fiscal policy in Canada is in a situation where it's unsustainable, but I do think protecting our very good fiscal position is important. It's important for social programs. It's important for the prosperity of the country.
Thank you, and thank you, MP Morantz and members. Just these mics are very sensitive, so let's just be careful not to touch them with anything, or to because it does affect the interpreters. And now over to MP Baker for 5 minutes, please.
Thanks very much, Mr. Chair. And so Governor Macklem and Senior Deputy Governor Rogers, thank you for being back here at the Finance Committee. As I told you when we spoke just before the committee began, I represent a community called the Etobicoke Centre, which is a suburban community on the western side of the city of Toronto. And this summer in particular, I spent a lot of time knocking on doors, just talking to folks in the community, ask them how I can help, what their challenges are. One of the things that I heard from them a lot was that a lot of them have mortgages. A lot of those mortgages are, some of the folks have variable mortgages, some where the rates have gone up. Some of them have fixed rate mortgages where they're coming up for renewal. And the question I got a lot from folks was, when are my interest rates going to come down? So that's my question to you. On behalf of my constituents, what would you tell my constituents about when are interest rates going to come down?
I think your constituents are a lot like most Canadians. I mean, that's a question on the mind of many Canadians, in particular Canadians who are carrying mortgages. It's about 38% of Canadians. I mean, the short answer is we need inflation to come down, and then we will be able to bring interest rates down. We have in our forecast outlined when we think inflation will come back to target. And as the governor was just saying, monetary policy is forward-looking, so we don't need to wait until inflation's all the way back to 2%. If we get signs that we can be confident that inflation is coming down and will remain down, we would start thinking about lowering interest rates. But we're just not there yet. The Governing Council has not started talking about when we'll reduce interest rates. We don't want to put false precision on it either. I know we would love to give Canadians an exact date, and we would love for that. We would love to be surprised and find out that we were too pessimistic and we're able to bring rates down sooner. But we will look forward as much as Canadians will to getting interest rates back to a more neutral level. But right now, our priority is to get inflation down.
I appreciate that. I have a couple questions left and only about 2.5 minutes, so I'll ask you to be as concise as you possibly can.
Yeah.
More or less, in your forecast, when do you expect inflation to come down to normal levels so that then interest rates can start coming down?
Well, we have inflation coming down basically back to target end of 2025, towards the end of 2025. As I said, the monetary policy is forward-looking, So we don't need it to come all the way back to target, but we need to be confident that it's on its way to being sustainably back to its target. So,
I appreciate that. That's helpful, I think, to my constituents. It gives them a sense of what you're looking at, what you're forecasting. One of the debates that rages here in Parliament that a lot of my constituents ask me about, frankly, is what caused prices to go up so high? Why are prices so high? And could you just speak to what has caused prices over the last couple of years or so to rise so much?
Yeah. Well, look, you don't get to 8% inflation because one thing went wrong. It's a combination, and in my response to an earlier question, it reflected both global factors and domestic factors. But I think that the main thing, there's two things I think that really stand out. One is almost every country around the world saw a big surge of inflation coming out of COVID. Certainly every major advanced country, every G7 country, certainly. And that really reflected the fact that in all our countries, as we got vaccines and came out of COVID, demand recovered much more rapidly than supply. And when demand runs well ahead of supply, what happens is two things. You can't get the things you want to buy, and that's what Canadians saw. You want to buy something, well, it's not available, and you're put on a long waiting list. And then pretty soon, when that happens, businesses start raising prices. And we saw this surge of inflation around the world. And as I said, that was happening. That affected global prices, which spilled into Canada. And similar things were also happening here in Canada. That reflected the prices that were more determined in Canada. And so central banks around the world have raised rates rapidly to slow demand, let supply catch up, and it's working. It's not working as quickly or as painlessly as everybody would like, but it is working. Inflation's come down quite a bit, and we think there's further declines in the pipeline.
I appreciate that. And just quickly, could you list some of those key global factors that have driven prices to go so high over the last couple of years?
Well, I would say the two main global factors are, the first thing is during COVID, we couldn't buy many of the services we wanted. Couldn't go to a restaurant, you couldn't go on holiday, you couldn't go to the gym. So people tended to substitute goods for services. So you can't go to the gym, so you buy home exercise equipment. But of course, that's got to be manufactured, it's got to be shipped. And so all of a sudden, the pressure on the whole goods sector is very high. At the same time that manufacturing operations, transportation are struggling with, people are getting COVID. There's lockdowns. There's restrictions. Work is not as efficient as normal. So they're having trouble creating the supply. Demand is running well ahead. And then the second thing that happened, the second big global factor was, of course, Russia's unprovoked invasion of Ukraine. Russia is a major oil exporter and natural gas exporter. It had a very big effect on global energy prices, particularly affected Europe. We were somewhat insulated in North America because our natural gas prices were not nearly as affected as Europe. And then, of course, Ukraine and to some extent Russia are also major wheat exporters, so you saw a big surge in wheat prices. Those, I would say, if you look at sort of what happened, the inflation we experienced, it started with more global factors. Those came off, and then we had more domestic factors. Our economy was overheated as people basically just wanted to buy more stuff than the economy could produce.
Thank you, MP Baker and Governor. And just so for everybody here, we don't have time for a whole round. So what we do here on this committee is we will split the time up evenly. It'll be 3 minutes for each of the parties before we go into our health break, and then we come back and we thank the Governor for the time to spend an hour on the housing study that we're doing, and the focus will be on housing. So with that, I'll go to MP Howland for 3 minutes, please.
Thanks, Chair. Governor, you, your predecessor, David Dodge, and even the current Finance Minister, Chrystia Freeland, all three of you, in your own ways, have said government spending increases demand above supply, which in other words, it fuels inflation. since March of last year, you've had to raise the rates 10 times from 0.25 until to 5%, what we see today. That's an 1,800% increase. The IMF has also warned Canada's most at risk in the G7 for a mortgage default crisis. I wanted to know, is that something you're concerned about as well, the default crisis?
Well, look, our biggest concern, and we've been very clear on this, is that inflation is too high. Our biggest concern is that Canadians are struggling with affordability. It is creating anxiety. How are they going to pay their mortgage? How are they going to put food on the table? You've seen big increases in demand at food banks. It's got to stop.
Absolutely.
And you know, the way to do that is to get inflation down, and that's been our beacon, that's been our focus, and all our actions have been taken to towards that goal. With respect to financial stability issues, you know, we are fortunate in this country. We have a strong, well-regulated banking sector.
I just have 3 minutes. I appreciate the answer, and I agree with you on that inflation needs to come down. And according to, again, what you said about the government spending, adding more demand, in this environment where spending needs to be moderated and getting inflation down, what the government spending is doing is not helpful to you. What would be helpful to you looking at the government today in order for us to avoid this mortgage default crisis?
Well, you know, the governors don't usually give the government advice on what to do with fiscal policy.
But you did say the government spending is making it not helpful to you.
I
So
think
in that
for
context,
all levels of government, looking forward, I think given that inflation continues to be above its target, I think more focus by governments on the spending, the inflationary consequences of their spending decisions would be helpful, and more focus on government policies that add to supply and not only to demand.
That would help us avoid
be helpful.
the mortgage default crisis.
Well, that'll help us get inflation down, and when inflation comes down, interest rates can come down, and that will help relieve some of the risks there as well.
Thank you.
Thank you, MP Hallen, and now we're off to MP Weiler.
Thank you, Mr. Chair, and thank you, Mr. Macklem and Mr. Rogers, for being here today and answering questions. In the monetary policy report, you mentioned that the outlook for consumer price index inflation through to the end of 2024 has been revised up, and that about half of this revision reflects the higher assumption for oil prices. And I was wondering if you could explain to this committee what type of an impact you would see happening if we reduced our reliance on fossil fuels and the impact that would have on inflation.
That is a really complicated question, and I wish I could give you a satisfactory answer. All I can tell you is, so we are starting to examine the macroeconomic implications of climate change. We have done a fair amount of work looking at the financial stability risks posed by climate change. That work is well advanced, and we're now trying to build economic models to start to get a sense of the consequences. But it is a very complicated question, and there's also, you know, different countries have taken very different policy responses, and those also have different implications for the economy. So I'm afraid to say there is going to be, you know, we're looking at this, many others are looking at this, and I can't give you an answer at this point.
Thank you. Mr. Blakey had a few questions on this before, but in your testimony last week in the press conference for the updated monetary policy report, you mentioned that corporate pricing is not normal right now, and you mentioned some of the factors that are leading to that in an inflationary environment. But I was wondering if you could put a measure on what type of contribution you see that abnormal corporate pricing behavior having on inflation in Canada right now.
Yeah, I don't think we can put a number on it, but what we can say with some confidence is that, so when inflation was low and stable, you know, we've had big shocks to input prices. We've had big fluctuations in energy prices in the last 25 years. And what we saw when that happened was that businesses were pretty cautious about passing on the higher energy price into their the prices they charged, not for gasoline, but for other goods and services. And when you ask them about that, they say, oh yeah, you know, we can't just pass these on. We're going to lose customers, and we don't want to lose customers. When inflation went way up, though, what we started to hear from businesses is, oh, it's much easier to pass on these price increases. And that's exactly what you see in the data. When input prices have gone up, so energy, the cost of energy, for example, those are getting passed through much more quickly to final goods prices. So households are bearing the full inflationary impact much more quickly. So that's what we can see, and that's what we can see pretty clearly in the data.
Thank you, and thank you, MP Weiler. MP Sainte-Marie, please.
Merci, Monsieur le Président.
Thank you, Mr. Chair. Governor, we know that HSBC wants to sell its activities in a number of areas, including in Canada. Right now, Royal Bank has shown an interest. Is it just OSFI that assesses that, or does the Bank of Canada also assess this possible transaction concerning the impact on the Canadian economy? Answer: the Bank of Canada does not assess this transaction. That is, as you said, it's really OSFI that looks after that, and the Competition Bureau as well. Great, thank you very much. So on a completely different topic, regarding the needs of developing countries to put in place more resilient infrastructure to mitigate climate change and adapt thereto. The American economist Joseph Stiglitz suggested an original approach a few days ago, and I'd like to have your thoughts on this. What he suggests is that with regard to the IMF, that the special drawing rights, well, it's the rich countries benefit from them. But what he says is that the rich countries don't need these drawing rights, and he suggests that they should be allowed to be used by developing countries. So they can be used to subsidize low interest rates or to put in place climate investments for those countries. So obviously the rich countries would have to authorize the transfer of these special drawing rights. And do you think that this would be a promising solution for developing countries? Thank you. Very frankly, that's a very long way from monetary policy, so I really can't give you an opinion. That would be a question for the IMF. Thank you. I wondered whether the Bank of Canada, given that it affects monetary elements, I thought perhaps you might have an opinion. Let me try something else then. I have a third question. I'd like to come back to the article by Mohamed Al-Ariam. He said that a global economy and key financial markets, such as those in the United States, do not have a dynamic growth vertical section, and this doesn't have any stabilizing effects. Do we also see that in Canada, and what would be your comments thereon? Could you repeat, please? I'm not sure I understood. Yes. The key financial markets, such as state bonds or certain pension funds, don't have any essential vertical anchoring. So, for example, trusts in economic policy and stabilizing effects. Well, here in Canada, our situation, our fiscal situation compared to other countries, other G7 countries, is in a very good position because we're the only ones with an AAA rating. And this is something that needs to be protected. It's an advantage for Canada. It reduces long-term interest rates for the government, for business, for households. It encourages investment, and it's good for the GDP growth potential. So it's something that we need to protect, and it's clear that internationally there are countries that have much bigger challenges. And yes, sovereign debt also entails certain international risks. Thank you, Mr. Sainte-Marie.
This will be our final question till we go into our health break, and we'll be back. But MP Blakey now for 3 minutes.
Thank you, Mr. Chair. I just want to return to our earlier conversation. I know you were beginning an answer there, and lay out the problem again, which is that, as Canadians have been, I think, gouged considerably in certain industries for things that they can't do without, the answer has been to raise interest rates in order to combat inflation. But you can see as a Canadian how you feel caught between two impossible situations. And so I am wondering, where is the role for considerations about equity and fairness in setting monetary policy? We have seen some other central banks be given mandates to consider things like housing prices and how they set their rate, to consider things like climate goals and how they set their rate. So, granted that I would accept the claim it's not currently part of your mandate to care about these issues of equity and fairness, but I would say that it should be, and I think a lot of Canadians would probably feel that there should be a role for that in it. How do you imagine either mandates of central banks or other tools in order to bring some of that question of equity and fairness into rate decisions at the Bank of Canada?
With respect to our mandate, we've already got a big job, and that is control inflation. And I think having a mandate that makes clear that the job of the central bank is price stability is very helpful. There are a lot of, those issues that you raised, they're important issues, but they are properly the issues of elected governments and ultimately Parliament. In democracy, most democracies, the central bank is charged with controlling inflation, and it's given the operational independence to use its interest rate to do that. That's a pretty extraordinary thing, and it should be limited to the job of the central bank. That doesn't mean we don't care about equity. In fact, one of our Deputy Governor, Sharon Kazicki, recently gave a speech where she outlined, we are, with the availability of more detailed data sets, we can now do a better job of seeing the impact of our policies on different segments of society. At the end of the day, we have one objective, we have one instrument. We don't have different interest rates for different people or different sectors.
I do hear
so
that.
we can't target, but it is important that we understand it.
And if I could just follow up on that,
Yeah.
Governor. I mean, when we talk about resource projects, we talk a lot about social license now. I mean, are you not concerned that there will develop a social license problem for important institutions that have their hand on important levers of the economy if economic correction seems to be coming always on the back of working class and middle class Canadians, particularly when the problems have been caused in large part by corporate players and wealthy individuals that have their hands on some important economic levers, which is access to capital?
Well, I'll say two things. One is, look, competition is a good thing. I wasn't being glib about that earlier. We know that if you look at the Canadian economy, one of the things we know is that export-oriented firms tend to have higher productivity than more domestic companies. That suggests, that looks like competition, and the Competition Bureau actually has recently done a fairly broad study, and I think there's some certainly useful analysis there. The other thing, competition results in stronger productivity growth. Stronger productivity growth pays higher wages. Higher productivity growth sustains rising standard of living. And, it would be great to have higher productivity growth in Canada. That makes everything easier. The other thing I'll say, coming back to monetary policy, is that, and your comments around the most vulnerable and inequality, two things. First of all, it is the most vulnerable members of society that are suffering the most from high inflation. They are feeling the brunt of affordability more than everybody else. They can't just move down market. They're already at the bottom of the market. Much of their spending is already on necessities. You can't cut back on that. And that's why it is so important that we get inflation down. Inflation is a tax that disproportionately affects the most vulnerable members of society.
Thank you, and thank you, MP Blakey. And so we're going to suspend now for about 10 minutes for a health break, and then we will be back with the Governor and Senior Deputy Governor for another hour. This is a quite a marathon session here. We thank the governor and the senior deputy governor for the 2.5 hours, and now we're going to go into. So this is focused on housing, although it can go wherever it may go. And we're starting with the first round, which is 6 minutes per party. And MP Lawrence, you're up for 6 minutes.
Thank you, Mr. Chair, and thank you, Mr. Macklin and Ms. Rogers, for coming here. For whatever criticisms you may face, a failure to communicate, I don't think can honestly be one of them. So thank you for being here. My questions are going to focus around the carbon tax, and then hopefully, if I have time, productivity. We had an exchange back in spring of 2022. We've known each other for a while now, Mr. Macklin, but Governor Macklin. So I asked you about the financial or the inflationary impact of the carbon tax. And I have seen it misquoted by both politicians and reporters. So I want to clear up something like that, clear this up. What you said, or what you wrote, actually, I've got it here, is that, and I'll just read it here for ease of everyone. According to bank calculations, if the charge were to be removed from three main fuel components of the consumer price index, gasoline, natural gas, and fuel oil, it would reduce the inflation rate by 0.4 percentage. What's been quoted throughout by politicians and journalists as well is actually the increase that you said, which would be 0.1 or 0.1, 0.5, I've seen as well. And so we've already had one increase. So if I can add 0.4 to the 0.1 or 0.1, 0.5, I've also seen quoted, that would be 5 or 50 or 55 basis points. Is that, am I understanding you correctly in that?
Yeah, that's pretty good. I'll give you the updated numbers.
Yeah.
So there's really two separate questions. So one question is, because the carbon tax is going up, right, over time. Mm-hmm. So one question is, how much are the increases in the carbon tax adding to inflation each year? And that number is about 0.15 percentage points of inflation. And that's the direct impact on those three components.
Perfect, thank you.
The second question you asked me was, what would be the effect if the carbon tax, what would be the effect on inflation if the carbon tax was eliminated? And that would create a one-time drop in inflation of 0.6 percentage points.
Okay.
So that would last 1 year. And since you can only eliminate it once, the next year it would have no effect on inflation.
For sure. For sure. And hopefully next year inflation won't be as a big a concern as it is this year. But just to reiterate what you said there, so it would be 60 basis points or 0.6%, which currently the inflation rate is at 3.8%. So that equates to more than 10, I think almost 15%, if I can do the math quickly, in a drop in inflation. So, is that would be a sizable drop in inflation. It would make your job, to quote you, it would be helpful, if I can. Would that be correct?
It's only going to affect inflation for 1 year.
Yeah, but as you said, Mr. Macklin, hopefully, and as you forecasted, inflation probably, according to your predictions, won't be as big an issue as it will for a year right now. So if we can get a year's relief out of that, that's Canadians who will be able to keep their houses, that's Canadians who will be able to enter the mortgage bracket, that's Canadians who will be able to feed themselves because of a 10% reduction in inflation. Isn't that so, Mr. Macklin?
It'll be down 0.6.
Yeah, thank you very much for that. I appreciate that. The other issue I want to talk to you a little bit about is the carbon tax and the impact it has actually with respect to productivity in general. So of course inflation occurs as you've mentioned, as basic first year economic textbooks say, when demand and supply get out of equilibrium. The conversation has focused almost completely around the demand side. And I realize that's more, demand is what you're there to control to reduce inflation. But supply also plays a big role as well. And with Canada, as you said in your report, productivity having flatlined over the last 8 years, and that's in contrast to U.S., where you've actually seen pretty strong growth with respect to productivity. Are you concerned, as much as you can say, I realize it might be limited, about Canada's productivity issues and the impact that could have on supply?
We are concerned about Canada's productivity issues. if you look, and this is not an issue of the last quarter or the last year, even the last few years. It's a 20-year issue. Canada's productivity growth has underperformed for about the last 20 years. If you look at how Canada has grown, this country has actually done a very good job of growing by adding workers. We have very high rates of labor force participation, much higher female labor participation in Canada than the United States. We have a good immigration system where companies are good at hiring workers, integrating them into the workforce, and that has really been the key to our growth. What has been disappointing is that we've been much less successful in growing output per worker or productivity. And why that really matters is that higher productivity pays for higher wages. It's the source of sustained increases in our standard of living. So it is a concern to us, but we don't really have any levers that affect productivity growth. We influence demand.
But just continuing on with respect to the inflationary impact of the carbon tax, any type of, it's my belief, Mr. Macklem, Governor Macklem, that any type of encumbrance that we put on productivity, we must try to avoid. And that carbon tax adds another encumbrance in the fact that businesses specifically don't get any rebates, unlike individuals, which is going to make us less and less productive. So it is a terrible tax because of what it does to our most vulnerable in our communities, but it's also a terrible tax from an economic perspective in that it is driving down our productivity when we can least afford our productivity to be driven down.
We've only analyzed the effects of the carbon tax, the direct effects on inflation.
Okay. Thank you, and thank you, MP Lawrence. MP Zarowitz, please.
Thank you so much, Mr. Chair, and thank you, Governor Macklem, for being here and for all your patience. I'm going to be asking you a question around the comments you made about the fact that core inflation has proven to be quite stubborn. I'm going to then talk about whether this maybe some of the underlying structural issues and then tie it to something we're hearing on housing. One of the things I've been just grappling with when I go and talk to Davenport residents, they'll say to me, Julie, everything's so high. And I'll say to them, well, we've put in a national childcare program. We are putting in aggressive climate action, but we're providing the climate incentive. We've got the Canada Child Benefit. We've got the old age security increase. We've lowered taxes several years ago. We've put in an extraordinary amount of support for our middle and our working class. And I haven't mentioned the Canada Worker Benefit, but we've increased that a number of times. And they're all geared to inflation. So you would almost think that they should be okay. We know that the food prices have gone up more than inflation. We know that energy prices have gone up and now come back down again. And then we've been talking about housing. And I guess my question to you is, one of the other things we're hearing about in our housing study is that there are issues, so say at the provincial level in Ontario, if someone moves out of their apartment, the average vacancy rate increase that goes in is around 29%. And so I guess my question to you is, would that be an example of a structural issue that would cause our core inflation rate to continue to be stubborn? And that would be a structural issue at the provincial level that needs to be corrected.
I think there's a couple parts to your question, MP Dershowitz. I guess I would start by saying, we talked earlier about the structural shortage of supply in housing. I think that's probably the number one thing that's contributing to keeping shelter generally and rent in particularly high. I think the situation you described, though, is when
it's rent control for vacancies.
Yeah.
It's rent control for vacancies.
Yeah.
So if that's not an effect, would that be a structural issue?
Well, to the extent that there is more demand for rental properties than there is supply, that's contributing to the increase in prices. I think what you're describing there, though, that significant increase where there is rent control, the opportunity that the landlord has to increase rent comes when an apartment turns over, when a rental property turns over. So you often see a bit of a catch-up or a big jump in the price. But again, the solution to that is to increase supply.
I would say it is to increase supply, but I'd also say that in a number of other provinces there are rent controls, and I do think that helps to keep rent for increasing to around 3% or 4% or even 5%, but not to 29%, which is the average of what you're seeing in terms of vacancy of what we are hearing at Housing Committee. Can you comment, Governor, on the fiscal positions of the provinces and territories relative to the federal government?
No, I'm not going to comment on the fiscal positions of every province.
No, that's okay. That's no problem. I just thought that you might have a response on that. My next question is around shelter price inflation. On page 21 of your monetary policy report, you indicated that shelter price inflation is expected to slow down from its current pace. Can you talk to the how and why you believe this?
So I'm just looking for the part you mentioned. So, what we indicated in the monetary policy report is that, given that the issue is largely supply and this problem has been building up for at least a decade, it's not going. We're very pleased to see the, all levels of government working with industry to tackle this problem. But even in the best case scenario, it's not going to get solved quickly. We're going to have to. We definitely need to work. Governments need to work on solving it, but it's going to be a pressure we're going to have to live with some time. I think what we did say is that that's one of the things that's standing in the way of getting inflation down, and that's slowing the decline in inflation. But when you look at everything else, we can see clear evidence that higher interest rates are cooling inflation, and as has come out in previous questions, there are lags in the effects of monetary policy, and as people renew their mortgages, these higher interest rates feed through the economy. We think there's more in the pipeline, and so that ultimately will bring inflation down, even if it's taking a little bit longer than we'd hoped.
And you're saying that will ultimately reduce the shelter price inflation as well, just to finish the...
No, we don't try to control the prices of every different piece. No, it's bringing overall inflation down.
Just to be clear, I just don't understand your comment around shelter price inflation is expected to slow.
I think the members should.
I think what we said was that shelter price inflation is likely to make a larger contribution to overall inflation for some time until that supply issue gets resolved, or at least.
Okay, thank you so much.
Thank you, and thank you, MP Zerowitz, and now to MP Samari.
Merci, Monsieur le Président.
Thank you, Chair. Governor, Senior Deputy Governor, concerning housing, is Canada currently in a housing bubble? Answer. In recent years, we've seen a considerable increase in the housing market. Average housing prices have gone up 50% in this country, and with the increase in interest rates, the housing market is now better balanced. The interest rate hikes have had a very quick effect on demand. It has driven demand down. And so now the market is better balanced than it was. This is a big country. There are different housing markets, different cities. In some cities, the situation is a little bit different, but if we look at it overall, it's better balanced in general today than it was. However, we still have an affordability problem, a housing affordability problem. And on that, how would you compare the Canadian housing market to the other Western country housing markets. There's a technical diagram in the monetary report. Yes, it's number 2. So you can see in box number 2 that a number of countries have experienced major fluctuations in housing prices during the pandemic, and that's not really all that surprising. Everyone the world over had to stay at home, and in all industrialized countries, we lowered interest rates to exceptionally low levels. The housing market is very localized. It's not a global housing market. So obviously prices differ from country to country. And so there are different situations, different scenarios. And as concerns the impact on inflation, the way in which statistical agencies in different countries try to quantify inflation in the housing sector is different as well. There are at least 3 different types of approaches to quantifying the housing market and to quantifying inflation. And so that reflects the differences, or rather it affects how this is portrayed in statistical overviews. Thank you. A question earlier in response to one of the questions, you talk about the inflationary crisis in the 70s and 80s, where there was double-digit inflation and corresponding interest rates. So people were paying very high interest rates when they bought houses. Would you say, if we look at all of the real estate market in Canada, would you say that it was easier at the time to purchase a house? Or is it easier now? And what would explain the difference between the two? Thank you. Answer. I don't have the affordability statistics right here in front of me for the 70s and 80s, or rather to compare those in the 70s with now. But what I can say is that after 10 years of very high and volatile inflation in the 1970s, the solution was to increase interest rates by over 20%. And that created an affordability crisis. People weren't able to afford housing. The cost of a mortgage rose astronomically. And so by trying to fix inflation before it becomes a big problem, well, that's exactly what we're trying to avoid taking measures like this. I know that things are hard for people right now, but the reason for hiking them quickly is to ensure that inflation does not become entrenched in the economy, because that's what happened in the 1970s. And when that happens, we will need to hike interest rates again to fix inflation. And that is what we want to avoid. Thank you very much. Thank you, Mr. St. Marie.
And MP Blakey, please.
Thank you very much. So after-tax corporate profits as a share of GDP in the year 2000 were less than 10% of GDP. In 2018, they were in the vicinity of 15%, and they're about 20% today, post-pandemic. And so I appreciate and take you at your word that you weren't being glib when you talked about competition as being one of the answers to that for Canadians. But, you know, I look at passenger transportation in Canada, I look at the oil and gas sector, the telecom sector, the grocery sector, the financial sector. None of these Canadian sectors are sectors known for the abundance of competitors, and they are known for being a kind of high entrance cost industry. So, given that Canadians don't actually have a lot of options when it comes to this, what are some other ways that we might look to provide relief to Canadians for the very real and substantial part of inflation they're experiencing that is attributable to outsized corporate profits? Because I think competition, while if it existed might help, it really doesn't in some key industries that set prices for things that Canadians can't do without.
The Bank of Canada has one tool to control inflation. There are, we've talked about the effects of different types of policies on both demand and supply. Those are decisions of elected governments. We're going to take those into account. The more supply is growing, the less we need to cool demand to reduce inflationary pressures. Government spending also contributes to demand, and if it grows faster than supply, that will make it more difficult to get supply and demand into balance and reduce inflationary pressures. Those are all decisions. Those are all your decisions. We're going to take those policy decisions as given, and we're going to use the tool we have to fulfill our mandate for Canadians.
Now, if you look at the 20-year period, roughly, from the turn of the century to now, I talked about the increasing share of GDP that corporate profits represent, but business investment in Canada has been down from 6% to 3%, and over that same rough timeline, you've seen the corporate tax rate go down from 28% to 15%, which I think suggests that there's certainly, in the Canadian context, no correlation between lower corporate taxes and higher business investment. In fact, if there is a correlation, it's inverse. And we've seen similar reductions or stagnation or reduction of productivity in Canada compared to its competitors over that same period of time. So when we talk about the need to see more business investment to raise productivity as another way of helping Canadians combat the adverse effects of inflation, is it not fair to say that corporate tax reductions have not helped in that regard over the last 20 years?
I'm going to leave tax questions to the Minister of Finance and the Department of Finance.
Fair enough. What was that? Oh, okay. Sorry.
Maybe she'll come here one day and answer them.
I can never tell when the mumbles are serious. Well, so here's the thing. When we brushed a little bit on the RBC-HSBC merger, and I think you said to my colleague that you hadn't done an analysis of that transaction, which is fair enough. I appreciate that's not the role of the Bank of Canada, but I do wonder, based on the general principle that you enunciated earlier, which is that competition is a great thing, if you may have some impressions about what having one less financial player in what is already a very small field when we talk about the Canadian financial industry would likely mean for Canadian consumers, particularly when the financial institution getting eaten up in this case is one of the ones offering lower mortgage rates than RBC.
Yeah, I don't think you'll be surprised. I'm not going to comment on any individual financial transaction between two private sector companies.
Okay. And so when it comes to the housing market, we'll just circle back to that. I mean, what has to happen in your mind in order to have, what actions need to be taken, either private sector or government, in order to start to see a depreciation either in the cost of existing housing stock, or at least to see housing stop being one of the major drivers of inflation in Canada today?
I don't think we can really add too much more than we've already said. We're not the experts in housing. We don't do housing policy. Housing is an important part of the economy, but it's not, it's only part of the economy. We have to consider the whole economy. I think what we can say with some confidence, based on what we've seen over the last decade, is that the fundamental issue is supply. What we've seen over the last decade is At first, we used a series of, I say we, this is largely OSFI and some extent the Department of Finance, but the federal system used a number of macroprudential measures to reinforce the stability of the system. Those mostly dented demand, and they would, when those were brought into place, so for example, they lowered the maximum amortization, put in better stress tests, for example. In fact, you were at OSFI. Senior Deputy Governor was directly involved in some of these in her previous role. Those dented demand, and they would bring the market into a better balance temporarily, but because supply just wasn't growing fast enough, eventually demand would come back and we'd be in a similar situation. And you're seeing that. We've raised interest rates very forcefully. That's had a very direct effect on the housing market. It's very interest sensitive. The market has cooled. Housing prices have come down about 10%. But, the fundamentals, that's just affecting demand. It's not addressing the fundamental supply issues. And I think what's that, the clear message from the experience of the last decade is that we're not going to solve this problem with demand. We've got to focus on supply.
Thank you, and thank you, MP Blakey. Now we're in our second round, members' witnesses, so MP Scheer for 5 minutes.
Thank you very much. I just want to clarify some terms because obviously inflation is a massive issue for Canadians and the interest rates that are rising to fight it. So when we talk about monetary policy and fiscal policy, just so I'm clear and everyone watching is clear, monetary policy, that's you. That's the Bank of Canada. You have tools at your disposal. You have interest rates. You have quantitative easing and tightening. But that's your department, I guess, is the same. Right. Okay. Fiscal policy, that would be the government. That would be the government spending decisions, taxation, borrowing, all those types of things. So that's fiscal policy. Okay. So when you say that you control the monetary policy and one of your primary objectives as the Bank of Canada, and this is from your website, says we influence the supply of money circulating in the economy using a monetary policy framework to keep inflation low and stable. So that's your main goal, is to hit that target on inflation. So while you're using your tools, raising interest rates and tightening up the money supply, now you're saying that the fiscal policy, the government's policy, its spending policy, is not being helpful. Did I understand that correctly?
What I said was, over the past year, government spending at all levels, federal and provincial, looks, by our estimates, has grown at less than 2%, so has not been getting in the way of getting inflation down. Looking forward, our estimate is that it will grow slightly faster than supply. And against that background, yes, it could begin to make it harder to get inflation down.
So it's going to undo. And I take your point about the past is the past. We're here to advise the government.
On the
We're
future.
here to provide submissions for the fall economic statement and the budget. So going forward, increases in spending will make your job more difficult, will undo some of the work that you've done with interest rates.
It will definitely make it more difficult to get inflation down if all that spending is spent.
Thank you very much for that clarification. If you got to the target rate sooner, if you're able to get inflation down with these interest rate hikes that are affecting all Canadians with any kind of debt, mortgage, line of credit, if you got to that sooner, would you be in a position where you could start to consider lowering interest rates?
Yes, if inflation, the sooner we see clear evidence that inflation is headed back towards the 2% target, the sooner we can start discussing reducing interest rates. We don't need to wait until it's back to 2%, but we need to wait until we're clearly on a path till 2%.
And can you just remind the committee what your target is?
2%.
2%, okay. So you've already acknowledged that the carbon tax would be, you say 0.6% off inflation?
For 1 year.
Okay, but it is important to remember that inflation is cumulative, right? So it's not like you remove the carbon tax, inflation automatically pops up the year after that.
Well, prices are cumulative. Inflation is the rate of change of
Sorry,
prices. So
yes,
it
yes.
falls
so the prices
out after
would,
a year.
Right. So I just think that's an important clarification. So do you have a target for government growth in terms of being helpful? You said the projected rate of government spending increases is unhelpful. Do you have a recommendation to the committee on where government spending growth could come in at, which would be more helpful?
Let me just be very clear. We have a big job. You have a big job. In fact, your job is a lot bigger than our job. You have a lot of priorities: healthcare, education, security, protecting the most vulnerable, and fiscal decisions are the decisions of government and parliament.
If I could, because I'm very short on time.
In terms of,
I'm not asking you for tell us where to spend or how to spend, but just if you have a target growth
so
rate.
I think there's a few things you can look at, but
just looking for
I think you want to look at
You could just allow the governor, please, to answer.
So if you're looking at the direct contribution of government goods and spending on goods and services, we think the potential of the economy is growing at about 2%. So if it's growing less, at 2% or less, it's not adding undue inflationary pressures.
How much time do I have, Mr.
You got about 10 seconds.
10.
But go, yeah.
Okay, I'll cede my time to them.
Okay, thank you. Okay, so P.S. Bendayan.
Thank you, Mr. Chair, and thank you, Governor, for being with us today. I'll pick up where Mr. Scheer left off. You were just saying that spending below 2% would not be adding undue inflationary pressures. Governor, I believe you said something very similar last week at the press conference, and I quote, "If you look at government spending over the last year, it was below 2%. It does not look like it's been adding undue inflationary pressures over the last year." I understand that you continue to hold that position.
Yes, story hasn't changed.
And Governor, you also mentioned over the course of your testimony today that not all spending is equal, that some spending could be inflationary, but you pointed out that some spending is actually not, in particular with respect to housing. And I know that Ms. Rogers, you mentioned this as well. You stated, "We're really pleased to see the degree of focus that governments are putting on the issue of supply-side shortages right now. That'll help." And you continued, Ms. Rogers. I wonder, Governor, if you can help Canadians unpack that. Why is it that not all spending is equal? And can you explain how the spending, particularly on housing supply, would actually be helpful in bringing down inflation?
So why are the impacts of different types of spending different? Again, this is probably better directed to the Department of Finance, but we do what the best job we can in trying to look at the broad elements of federal and provincial budgets and build in the effects of different types of spending. So, to give you an example, if you're making an investment in a large infrastructure project that's going to be built over many years, the consequences of that spending are going to be spread out over a long time. So you have to look at the profile of when it is. You also have to look at what exactly is it. So if it's, for example, if you cut taxes, that will leave more money in the pockets of households, but they're not going to spend it all. They're going to save some of it. So some of it gets spent, some of it will add to demand, some of it will go into savings. Whereas if the government builds a new building, it's all getting spent. So the direct spending impact is bigger. You mentioned, to use an example that was raised, the government's subsidizing of daycare. That's having both demand and supply effects. It's making it easier for women with young children, or actually men with young children too, but it's largely affecting women, enter the workforce. And so that's increasing the supply of workers. Of course, when you have new workers, they've got new incomes, and they're also going to spend that money. So it's also adding to demand. So, these are examples of how different policies can have different effects. When you get to housing, a policy, for example, that, for example, let's say a government gives people money to make it easier to buy a house. Well, of course, that's going to stimulate the demand for housing. It's not going to create any more houses. And in the current context, that'd probably make the situation worse when the problem is supply. On the other hand, measures that improve the supply of housing will bring demand and supply into better balance. Some of these measures are budgetary, but some of them are not budgetary. They're how approvals are done. They're how the provinces and municipalities and the federal governments are working together. So they're not all budgetary items.
Mr. Chair, do I have time for one more question?
You have 40 seconds.
Governor, one of the bank's main roles is to ensure the economic, financial welfare of Canada, and I wonder if you can speak to the importance of keeping Canada's pension plan intact. I understand that the CPP represents over $409 billion of Canadian-owned assets. In your view, is this important in order to keep Canada's sound and efficient financial system intact?
Well, again, we really don't do pension policy. I will say that Canada's pension system is admired around the world, and I think it is a great benefit to Canadians. But I don't have any view on the various policy proposals that are under consideration or being proposed.
Thank you, and thank you, P.S. Bendayan. And now to MP Samari, please.
Oui, merci.
Thank you. Concerning the housing market, we've heard a lot about issues concerning supply, for example, building units faster. Now, I'd like to hear what you have to say about an issue that has to do with demand, that is the high growth in the current population. StatsCan has figures on that. Have you analyzed the impact on the housing market with regard to the part of the demand that concerns that stems from population growth? I'd like to hear what you have to say. Answer: yes, we have conducted analyses of the impact of immigration, and immigration has a number of effects on the economy. In the housing sector, of course, if there are more people in Canada, then obviously they have to be housed. And the high increase in immigration, some of it is because of permanent residents, but there are also temporary residents as well. And so there's a considerable increase in the number of students from abroad, and for them, I think that yes, the rental market for them is so yes. So we see effects in both the housing and the rental market. And so with the higher population in Canada, then that obviously increases demand for housing. The other effect is that with more people, there are more workers, and that helps on the labor. That helps with the labor market, with the labor force, rather. We conduct a regular survey of businesses, and last year there was a great, considerable shortage of workers. But if we look at if we looked at housing market indicators, we saw that it's tight, but it's not as tight as it was. So I think it's because of this increase in the labor force, which is linked to immigration, and also a stronger participation on the labor force, on the labor market of those who are already here. So, yes, so we're talking about the overheating of the labor market. Thank you.
Thank you, Mr. Chair. Jim Stanford at the Center for Future Work has said that since 2019, the amount of corporate profit built into each dollar of real output produced in the economy has gone up by 50%. So that's another metric we might use to kind of assess the extent to which corporate profits are driving Canadian inflation. Now, I'm wondering, for the carbon tax, you have a number. Get rid of the carbon tax, you get a 0.6% drop in inflation for 1 year. Have you calculated if corporate pricing behavior were to return or were to change such that we had unit profit costs that was back down to pre-pandemic levels instead of the 50% higher level that we're currently at, what the impact on inflation would be?
I don't have a number for you. It's a much more difficult thing to calculate than the carbon tax. Is a very specific tax. We can see exactly the things it's applied to, and we can back out. And that number that we've backed out is only the direct effect. The secondary effects are probably pretty small, so it's a reasonable approximation. But
is an assessment of that effect on inflation of unit profit costs something that the bank could undertake to study and report on?
We have studied. We have, as Senior Deputy Governor indicated, our colleague gave actually a full speech on this issue, and as I said, what we can see is that it's more about the speed at which higher input costs get passed through.
But is it not true that if it was just passing on higher input costs, that profit wouldn't go up? Doesn't profit only go up if you have price increases that exceed the additional input costs?
That is correct. I think, though, when you're looking at the profit share in the economy, there's been a long secular trend over many years. We've seen a rising share. The return to capital over time has tended to go up. The return to labor has tended to go down. That's a long secular issue. That's not something that's just happened in the last year.
Yeah, not secular in respect to fiscal policy, though, which has offered a declining corporate tax rate in a climate of declining business investment. I mean, maybe we're just talking across purposes in terms of how we deploy the word secular here. But it's not like that was just sort of not happening because there weren't ardent believers in certain
I'm not
kinds of
saying it's
fiscal
secular in the
policy
sense that it sort of came
that
from
have
outer
created the
space.
context.
What I'm saying is it's secular is maybe it's just a trend over many, many years.
Indeed.
Is all I'm trying
Thank
to
you.
say.
Thank you, MP Blakey. And now to MP Chambers, please.
Thank you, Mr. Chair. Senior Deputy Governor, I just want to clarify because we had a bit of a back and forth before my last round. But I think I heard you agree that it's possible that the market is demanding a higher interest rate in order to absorb the record amount of government debts, all government debts. And I'll note that most of the debt being rolled over this year by the federal government is debt it incurred during COVID, and I'll say negligently borrowed at the short end of the curve. But isn't it possible, or would you agree that the market is actually demanding a higher interest rate because it has to absorb that amount of borrowing?
Whenever there's more debt being issued, there's more competition, so prices will go up. But
okay, thank you very much. Governor, you mentioned in the press conference last week about the path to a soft landing is now narrower. My sense of it is the risk now is greater that we will have some kind of economic event or uncertainty that in normal times would demand a lowering of the interest rate. But if we can't get inflation down before that happens, and now it looks like 2025. So if we have some kind of reason to lower the rate before 2025, before inflation comes down, that we're not going to be able to lower the policy rate in order to deal with that economic shock. Is that?
As long as inflation is well above the target, it will certainly be harder.
Right. So it'll prevent us high inflation staying around till 2025 will prevent the bank from acting to support the economy if we don't have inflation under control?
It will make it harder. It depends, obviously, on the size of the shock. If it's a big enough shock, the downward pressure on inflation caused as a result could cause us to reconsider our rates. But yes, I largely agree that when you're starting from a position when inflation is above target and has been there for 2 years, you have less scope to lower interest rates and stimulate growth.
So kind of underscores the importance of governments at all levels of taking all the necessary steps they have in their toolbox in order to lower inflation, to basically make that narrow path as wide as possible in order for the bank to be able to act if it needs to act. Is that fair?
I think that's fair.
Okay. Perhaps when premiers write you a letter, were you just screaming inside wanting to write back 2 words, stop spending?
With respect to the letters, I know you're all hearing from your constituents. I know the premiers are hearing from their constituents. And this is putting more focus on inflation. It's putting more focus on interest rates. And I think that's a good thing. And look, as I've said already, I think it would be helpful if governments at all levels were considering the inflationary consequences of their spending decisions when they take those decisions.
And I think we're going to find StatsCan will report the new poverty line statistics early this year. I think it's January or February. The number of households or individuals that will now fall below the poverty line because of inflation is going to be quite high. And I suspect, as you said before, inflation hurts the vulnerable the most, so it's important. If we don't get this right, it's the vulnerable people that will suffer most, correct?
I agree.
Yeah. So my last few minutes, I read with great interest that the bank picked up Nick Leswick from the finance department, so he's no stranger to this committee, and I know he'll do a great job for you, and I'm glad to see him go to the bank. Thank you for coming today. Thank you for being transparent and available to answer questions. I think it improves the confidence that Canadians have in the institution. Thank you, Mr. Chair.
Well, thank you, MP Chambers. And this will be our final questioner, and that'll be MP Baker for the last 5 minutes.
Thanks very much, Mr. Chair. And again, Governor and Senior Deputy Governor, thank you for being here today with us. I'd like to, in my earlier questioning, I had asked you about the causes of prices going up, the causes of inflation. So I want to recap some of what you said, and then I have a few questions if I could. When you talked about the primary cause of inflation, I noted down 3 things. You talked about some of the supply chain bottlenecks that were caused during the COVID crisis, which didn't allow supply to keep up with demand. You spoke about Russia's invasion of Ukraine and the resulting impact on energy prices and food prices globally. But you also talked about demand here in Canada domestically bouncing back more quickly than expected post-COVID. Is that a good summary of the 3 sort of most important factors that have driven prices to go up over the last several years?
Yes.
Thank you. And you have said during your testimony here today that inflation is a global phenomenon. We just talked about some of those global factors, but it's also infected countries around the world, including our G7 counterparts like the U.S. and European countries. Is that correct?
Yes.
Okay. And during this, as prices have risen, the government of Canada has taken certain initiatives to help folks with this problem of rising prices. Part of it is around doing what government can to address the underlying causes. So to the extent that we can, we're showing tremendous support for the Ukrainian people in their fight in the war. We've tried to take the steps we can to sort of unwind some of the supply chain bottlenecks to the extent the government can do that. But we also, perhaps more notably, provided supports to people, especially the most vulnerable people in our society, with programs to help them with the cost of living. Things like we talked about today, like child care or dental care or a grocery rebate or things like that. Notwithstanding that, what I've heard you say today is, up until today, that government spending has not contributed to inflation. Is that correct?
What I said is if you look at government spending over the last year, it has not been getting in the way of getting inflation down.
Okay, thank you. Thank you. So inflation is caused by global forces and domestic forces. It is affecting countries around the world. So the cost of living challenges that Canadians feel are being felt to a great degree in other countries, if not to a greater degree. And the government has, up until over the last year, government spending has not contributed to inflation, is what I'm hearing. So far, is that correct?
Good summary.
Okay, thank you. One of the questions that you were asked by one of the colleagues here at the committee was about the impact of eliminating the price on pollution or the carbon tax, and I think you estimated that there'd be a one-time benefit of 0.6% on prices. Is that correct?
One-time reduction.
One-time reduction of 0.6% in prices. Thank you. Could you speak to what the costs, economic or otherwise, could be of not acting on climate change?
Climate change is not in the Bank of Canada's mandate. We are, in response to a previous question, I indicated, climate change is already, and it's only going to become a bigger force on the economy. Our mandate is to control inflation, and in order to do that, we're going to have to understand the effects of climate change. And there's two kinds of effects. There's the physical effects. I think that's what people are seeing experience, whether it's forest fires or floods, extreme storms. Those are disrupting people's lives. They're disrupting economic activity, and so that that is something that we need to understand how that affects the economy. And then there's the transition. If we're going to transition to net zero growth, it's going to affect almost every sector of the Canadian economy. It's going to be you're going to have to see large investments in more renewable types of energy. So that's a big transition. That's going to have a variety of effects. It's going to add new costs. It's going to create new opportunities. So again, we need to understand how those things are going to affect the economy and what the implications are for inflation. We're really just at the very beginning of that, but we don't. Climate change policy is very much in the hands of governments, which is where it should be.
And Chair, how much time do I have?
Got about enough time for one question.
So I'll just find, earlier the Senior Deputy Governor had alluded to the fact that the forest fires, and I noted down, had a 0.5% reduction in GDP in the last quarter. Did I get that correct?
Second quarter, yeah.
Second quarter. So we understand, of course, that as the climate changes, that increases the likelihood and the intensity of some of these extreme climate events like forest fires. So to me, this gives us an indication of the degree of magnitude of the economic impact that we are going to be facing and the consequences we will face if we don't act on climate change. So I want to thank you for your presence here today.
Thank you, and thank you, MP Baker and MP Blakey. You have your hand up?
Just a quick question. I wonder if the governor might follow up in writing just to say whether the 0.6 reduction in inflation assumes no corresponding price increase.
I've got another hand up. So listen, okay, we have to end this FINA kind of reach the finish line here of this marathon session.
Secondary effects. It is just a pure direct
Yeah, I
calculation.
just wanted to see if the committee could get an update on the report that was supposed to be tabled about the motion that was passed last week about the committee, minus the support from Liberals, that want the finance minister to reject the HSBC RBC report. Do you have a date for when that would be tabled in the House?
I've got it for tomorrow. I think I'm tabling it. Yes, tomorrow.
Thank you.
Yeah, you're
Thank
welcome.
The point of order. Have they scheduled Chrystia Freeland for?
MP Lawrence, listen. So we want to really.
Point of order. Have they scheduled Minister Freeland?
Okay. MP,
Maybe Vaughn would like to answer that.
P.S. Bendian.
This is not a point of order.
No, it's not. And listen, what we want to do is thank the governor and the senior deputy governor for being here for this marathon session. It has been over 2.5 hours, and for answering many of the members' questions. We thank you on monetary policy as well as our housing study. We truly appreciate it. And on that, members, we are adjourned.
Thank you.
Thank you.